Hello and welcome to the look ahead for Friday, the 24th of May, with me, Fiona Sincotta, Senior Market Analyst at City Index. So, overnight, we'll be getting inflation numbers from Japan. Then, in the European session, we'll be seeing GDP Q1 figures. These are the second reading. We've also got UK retail sales. Then, in the US session, we have Canadian retails, followed by US durable goods order and Michigan confidence. So just kicking off with the UK. So we've got UK retail sales, which are expected to fall 0.4% month on month after coming in flat at 0% in the previous month in March. Now, there's quite a lot that's going on in the UK. Obviously, we've had that inflation data this week, which came in a little bit hotter than expected, but still the lowest level since summer 2021, down at 2.3%. But it did see the market just push back on rate cut expectations to August rather than June. We've also had news that the UK is heading for a general election on July the 4th. So let's see how all this is playing out on the pound US dollar. So this is cable that we're looking at here. Obviously, it's also worth keeping in mind that today we had data come in, the CPI figures. The service sector CPI was slightly weaker than expected as well. So, I mean, putting all these things together, I think there is a little bit of caution as far as the pound is concerned. I think generally speaking, although with the election, although Labour is ahead in the polls, that sort of sense of political uncertainty could just mean that demand for sterling wanes over the next 6 weeks. Now, at the same time, we've got some strength in that US dollar. Well, we've seen strength in the US dollar, but it has just come off today. But that's on the back of those hawkish Federal Reserve minutes that we saw, where there's clearly Federal Reserve policymakers are concerned over the sticky inflation in the US. Now, obviously, we had the PMI data from the US today as well, and that came in stronger than expected. We also had jobless claims figures from the US, which again showed that there is a sense of a strong labor market still there. So what's happening here? If we got the pound US dollar trading at 127, see those long upper wicks on recent candles, that suggests there isn't much buying demand at those higher levels. So we're testing that 127 level. If we get a break below there, we'll be looking down at the 126.30, which is the 100 SMA. Also that static support as well below there exposes the 200 SMA at 125.45. If we do find 127 holds, then on the upside, look out for a test of the 127.50. That was the weekly high ahead of 128, the round number. So just looking at the DAX now, because obviously we've got that GDP figure coming in from Germany. As I said, it's not the first reading. Preliminary reading tends to be the most market moving. So not necessarily expecting a big move on the back of it, but we are expecting it to confirm 0.2% growth in the quarter. That's quarter on quarter. And the data comes after PMI data in Germany today actually showed some encouraging signs. We saw the service sector come in stronger than expected. We also saw the manufacturing sector, which, if you remember, has been seeing this really deep contraction. That also came in stronger than expected, boosting the composite PMI to 52.5, up from 50.6. So real signs that we are sort of seeing that recovery in the Eurozone's largest economy. Now, what does all this mean for the DAX? Well, we can see the DAX actually is hovering around the 18,635 level. Now that is the April high. It's come down from the all-time high of 18,928, which was reached earlier this month. And as I said, we're just in this consolidation phase. That the support is really at that 18,635, which is that April high. If we do see a break below there, then that's going to expose the 50 SMA, which is at the 18,250 level. The other thing to bear in mind, just as far as sort of fundamental factors supporting or not, in fact, the DAX, is we had those negotiated wage figures out from the Eurozone for Q1. They were actually stronger than expected. So that does just add a few questions over the ECB's ability to continue cutting interest rates beyond June. If they're going to be faced with sticky wage growth, that could keep inflationary pressures hotter. Now, that could create some downward pressure on the DAX. But as I said, so below the 18,635, look out for 18,250. And on the upside, if we do find that 18,635 level holds, then I think the next logical level beyond the 18,928 all-time high will be 19,500. So just also having a look, we've got, sorry, bear with me, that's sterling US dollar. Let's just pull up the Canadian US dollar, Canadian dollar, because we've also got retail sales from Canada coming in. Now they're expected to be flat at 0% after falling 0.1% month on month in February. The data comes amid expectations that the Bank of Japan is actually going to start cutting interest rates in June. If we have a look, we've seen some upward pressure actually on the loonie in recent weeks. And that's also, so just since the start of May, really, it's seen that rebound that has come in. That's from that 136 level. So we've seen a rebound of 136. It's pushed back above that rising trend line support. And we're just testing that falling trend line resistance. Well, that's going to be the next level to test. At the moment, we're at 137. I think sort of that central bank differentials is really helping to drive the US dollar CAD higher here. Also, just remember, we've got some weakness. We've had weakness in oil prices that are trading down around the $78 the barrel. So as far as levels to be watching, 137 is where we are trading right now. Just on the upside, around that 137.15, you've got that falling trend line resistance. And if we do get a break above there, then I would be watching out for 137.90, which is the May high. If we find that we're struggling at 137 on the downside, the next real line for support there is the 136. That's the May low. And below that, you've got the 200 SMA at 135.60. Just finally, we're going to be having a look here at the Nasdaq. Can't really ignore the Nasdaq as the Nasdaq as it reaches record highs following Nvidia's earnings. Now, just looking ahead to tomorrow, we've obviously got this AI rally that's going on. I think there is potential for that to really help the stocks to the next leg higher. But let's remember that we've also got concerns over high interest rates for longer, which could limit the upside. So we had those Federal Reserve minutes, which were more hawkish than expected, with some Federal Reserve officials even suggesting that to raise interest rates in order to tame inflation. Now, tomorrow we've got durable goods orders. They're actually expected to come in lower than the previous month, falling 0.8% after a 2.6% rise in the previous month. We've also got the Michigan consumer confidence coming in, which is expected to improve just slightly to 67.5, up from 67.4. Basically, if we see strong data, that's going to be making the markets nervous that the Federal Reserve are not going to be cutting rates anytime soon and could even consider bringing back rate hikes. So I think that's what we need to be just watching out for. That could really just knock the or limit the upside and prevent the Nasdaq from reaching that key 19,000 level, which it was literally, we got up to a high of, before recording this, at 18,466. So, sorry, 18,966. Anyway, as far as support and levels and resistance to go, so on the downside, the support there is at 18,466, which was the previous high that we're seeing in April and in March. As far as the upside is concerned, 19,000 and above there, 19,500 would be the ones to watch for. I hope you've liked what you've seen. If you have, then please do give this video a like. And if you would like to receive more videos like this, then please do subscribe.